Let's move now next to Woolworths. Woolies, of course, everybody knows the food operations here in this country. Fabulous, high-end positioned, organic, cold chain preserved, all the rest of it. But of course, it incorporates all of the clothing. We're talking with regard to things like traineries and witchery and all of that stuff globally.
Country Road.
The biggest issue, Country Road, thanks Sid, is that they have acquired this monster business, David Jones, in Australia. So the question now becomes, with more than 50% of the profits coming from Australia, how's it going to do in forthcoming times? It's through its whole capital raising side of things, so that's all done and dusted. It's trading at a pretty elegant level. It's got a 92 billion rand market capitalization, price to earnings ratio of 25.6 on its prior earnings, dividend yield of 2.6. So, Sid, what do you make of the theory that the only reason that Ian Moyer bought David Jones is so he could live in Australia with his family?
I don't think that's correct at all.
Okay, good.
I think Ian Moyer is a seasoned professional manager. Yeah. And when he's completed his task at Woolworths, and David Jones for that matter, I think he can move on anywhere else. Mm-hmm. That's how I read him. And whether it's going to be in Australia or whether it's going to be in his native country, Scotland, it doesn't matter.
Well, let me ask the question slightly differently. Do you think that adding an Australian clothing retailer, I don't know they do other things, and then building this kind of Southern Hemisphere clothing distributor with real power and purchasing brains is a compelling enough business case that can propel us above 100 Rand a share?
It's a compelling argument because they're not the only retailer who's trying to establish a southern hemisphere base. Yep. Zara trying to do it. Yep. I think H&M are probably going to try and do it as well. So yep. They've got good company. Mm-hmm. The question is execution. Mm-hmm. Will they get it right or not? And I think currently the share price is predicated on the theory that they probably already got it right.
Yes.
But they haven't got it right yet. We haven't had enough time. Some of these things can take up to 3 years. Yeah. If you look at the Woolworths turnaround itself, I thought it would take 2 years. It eventually took well over 3 years to get it right. Fortunately, it worked. And Ian Moyer was part and parcel of the process that made it work. So there's
the share price, Sid. So you can see that it has that bit of a wobbly 2013 and all kind of going, and then the deal, and then the financing of the deal and so on. But certainly now at around 91, 92 Rands a share, it's looking good. But your concern, just to emphasize that, is that perhaps people are sort of bargaining on the turnaround of David Jones and the revenue growth and all of that in a slightly sort of presumptive way.
Absolutely. And remember, in this transaction, with the Aussie dollar and the South African rand, the ratios remain pretty constant. So it doesn't look like there's going to be any currency benefit from this transaction either. Yeah. Unlike many other cross-border transactions. Yes, yes. So my kind of feeling right now is it's already priced on the.
But to be fair, Australia looked quite good with regard to consumer revival or something. I'm not quite sure why. The mining companies there also perhaps need a bit of a pickup. So if they got the timing right by luck, and Australian economy looks relatively good and there's a nice uptick in consumer confidence, then just by professional management and taking out costs and rejigging the property portfolio and all the rest of it, they might be able to get David Jones up and running at a much better level than it was before.
Yeah, no, absolutely. I'm not saying they're not going to get it right. All I'm saying is I think the market is assuming that it's already been, the job's already finished, and that's reflected in the share price. Yeah. I think the share price is going to level peg for a long time until we see the positive turnaround, until we see the numbers come through.
Yeah. Yeah. Okay. So with regard to the hot or not thing, I sense you're sort of leaning towards the not hot on this one, which is a bit desponding making for me because we own some of these in our hot stocks portfolio.
Well, I hate to say it, but I bought some many years ago for my son. Yeah. At 25 rands or something like that. Yeah. So I'm also despondent, but I'm not going to sell them. Yeah. I'm going to go for the ride.
Because it's got a great dividend yield. These chaps have really done extremely well. The food side of the business continues to shoot the lights out. The upper end market like shopping there. It's all good. So you're not hot for the moment, though, just on kind of price issues.
That's it.
Okay, I'm going to stick with hot because I generally think, when are their results coming out?
It's a June year-end, so there will be a trading update around about the 3rd week of July. Results about the 3rd week of August.
Because they've still got plenty of water. And there are more shares in issue now, and there's also some kind of moving target issues.
That's another. We're going to have the annualization of the rights issue coming through in the June numbers.
Which caused some complication. Anyway, okay, so we're going with a not hot, and I'm going with hot on this one.